Hi, everyone. Today, let's talk about the wholesale prices. Then we'll get right into the charts. Then we'll go over my results for the day and my positions going into Monday. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So, wholesale prices came in a little bit higher than expected, 0.3%. The expectation was 0.2%. But we do have to acknowledge that this is still declining, just not as fast as we want it to. You can see here they say 0.3% or 7.4% from a year ago. Core PPI was up 0.4%, also against a 0.2% estimate. So core was up a little bit more than expected at 6.2% year over year, which is still down from the 6.6% in October. Again, just not as much as we want it to be. You can see what that looks like on the charts here. It's still coming down fairly quickly month over month. It's just coming down a little slower than we thought, which is going to give the Fed ammunition to keep rates higher for longer, which of course is going to continue to damage the markets and damage the economy and could put us into that longer term recession that I keep hearing so much about. As you would expect, stocks fell right away. They did recover fairly quickly, but then sold off into the end of the day, and we'll take a little bit closer look at that on the charts. Based on this hot inflation data, you can expect to get that 0.5% and definitely not get that 0.25% that people were talking about. Seems like a solid 0.5% is coming in December, and they're probably going to keep that target rate up around 5%. I think this 4.25 to 4.5 is a little bit lower than what they've actually said. I think it'll be a little bit higher than that at the terminal rate, and they've messaged that several times. Another point to mention here is that services inflation actually accelerated here, so rose by 0.4% versus 0.1% the previous month. And a lot of that service-related inflation was actually in the financial services industry, which surged 11.3%. We did see some declines, though. Transportation was down 5.6%, and on the goods side, the index rose 0.1%. So we are seeing services go up a little bit, which is pretty expected. It's kind of weird that it's all in the financial services industry. That's probably not something that I could have foreseen. And then in goods here, you can see food did go up a little bit, 38.1% acceleration in prices for fresh and dry vegetables. Overall, I see this as a precursor to the CPI data. If PPI comes out a little bit higher than expected, CPI could potentially come out higher than expected. And I don't think we're going to see CPI come in any lighter than expectations, which is going to give the market more reason to fall versus rally out of the CPI data. Moving over to the charts, starting off with the S&P 500 on the daily chart, you can see we got that big hammer formation here. So we got that small up day yesterday. We did rally through the session a little bit today, and we'll jump down to the lower charts. But you can see this ended up being a hammer formation, and it looked weak right into the close. So let's jump over to the 1 hour. You can see a little bit better what that looked like. You have the up day yesterday, went flat into the close. We did gap up on the day. We did look strong into the close yesterday, so the gap up in the pre-market was not unusual. And we went right into that range that I said here. Looking at that, did not quite get to 400, so a little bit below, but 398 was a level that we were watching, and it stopped right there. And then on the PPI data, it surged all the way down to 392, rallied into the midday, and then sold off really heavily here into the close. Surprised to see this really big red bar here right at the close. And if we jump down to the 15-minute chart, you can see what that looks like even closer. We were holding really throughout the day, and then the last 3 candles here on the 15-minute just sold off really aggressive. Thought we were just kind of coast sideways into the close, and then the market just decided to sell off in the last 45 minutes. Moving over to the NASDAQ, similar story here, gap up, tested those lows on the inflation data, rallied into the midday, and then sold off really strong into the last hour. I guess it's not super unusual for the market to pick a direction in the last 45 minutes. Usually the first hour and the last hour have the highest trading volumes, especially in the last day of the week, but I was watching it through the last 2 hours, and I saw this doji here, and I thought we were just going to kind of coast into the close. That's not what happened, and I did get caught off guard a little bit. Moving over to the Russell on the 1 hour, it looks even weaker than the other two. We have the up day yesterday. Same story, gapped up, dipped, but it was selling off throughout the last 4 hours. Big red bars for the last 4 hours. Did have that one doji there right at support. Thought maybe this could hold, but it did not. And we sold off all the way down to 178. So we're below that support line now. And we're looking at maybe 175, 176, and then we have some solid support down at 174.50, which would be the lows here on November 9th. But I don't see any support really until we get to that point. So I would expect this to fall at least $4 or $5 over the next few days here. Do want to do one top gainer today. This is the daily chart. This is CHWY. You can see big green bar here today. CHWY does not care about inflation data. This chart is very solid. Looks like we're going to get a breakout here. And if this breaks out of this longer term downtrend that we've been on, I would expect this to go much higher. We don't have resistance until we get to about $50, so about another 10% higher from where we are right now. So if this breaks here, CHWY definitely looks like a nice bullish trade come Monday or Tuesday. Moving over to transportation on the daily chart, I do want to emphasize that we basically went sideways. We actually gapped down, rallied up a little bit, and then went sideways throughout the session, closing basically at the same point that we did yesterday. Momentum here on the MACD is to the downside, and the RSI is still fading here. Did get below the 50 line, so definitely expect that to get down to oversold conditions at this point. Still sitting above this little gap that we have here, and I would expect that to close fairly quickly on Monday or Tuesday. There's certainly potential that it holds above the gap until the CPI data. It's worth noting that usually the day before big economic announcements, the stock market does have low volume and it tends to go sideways, if not down a little bit, as people are closing their positions prior to moving over to stocks above their 200-day moving average. You can see based on the wicks that we rallied a little bit during the day, but then closed lower than the previous day. So we engulfed that one green candle that we have, and this looks very likely to move to the downside here, which is exactly what you want to see if you expect the markets to go down. Moving over to GDX, this is not a stock that I talk about very often, but I have mentioned it in the past. It's been on a rally here recently. This is the daily chart, and you can see we've been up pretty dramatically. It's not selling off like the rest of the markets. It did sell off a little bit here today, but it's still sitting on top of its 9 EMA. And it does have a little bit of bearish momentum, but I would be watching for this to come down to, I don't know, maybe 28.30, possibly 27.70, somewhere in this zone before we get at least a little pop up here. Maybe this is starting to form a head and shoulders type pattern. But gold is starting to look very nice. Gold has held up pretty well against the major indices. And these economic conditions are actually pretty good for gold. Usually when you have high inflation and rates not going up, gold tends to be one of the better assets, which is kind of the economic condition that I expect, at least somewhat, during the next year. Moving over to DXY, on the hourly chart, you can see yesterday's session, big movement down, which is what you should expect when the markets are moving higher right now. And then overnight, we sold off right to that 104.50 level, which is a level we've been looking at for quite a while. It's been on the charts for a while, and we held right there. And then we found some legs here throughout the day. And as the dollar rallies, you should expect the stock market to move down. And this looks pretty bullish here. We now have a low and a higher low. If this rallies up to above this previous high, that's really going to push the markets down. And that really does fit with my thesis as well. If this rallies up to new highs somewhere into this maybe 106.40 level, or maybe up even to the previous high, 106.80. If we get up here, that's going to be bad news for the stock market, and that fits right in with my thesis. My guess is that this is going to generally move sideways on Monday into the CPI report, and then if CPI comes back as expected or a little hotter than expected, then I expect the dollar to move much higher, and the stock market will move down. Looking at JNK on the hourly chart, doesn't look exactly like you would think. It did rally through the session, but it closed pretty much at the close of day yesterday. So still looks a little bit stronger than the rest of the markets. Bonds seem to be doing fairly well, which based on the economic conditions is not unusual. If inflation is in fact starting to come down and continuing down, even if it's a little slower than expected, bonds should start to pick up. Bonds tend to do bad during inflation because people don't want to lose money to inflation. And if the bond yields are not high enough to keep up, then bonds will tend to sell off. But inflation seems to be coming down, even if it's a little slow, which could give bonds a little bit more legs. It'll be interesting to see what happens to JNK if the stock market sells off on Monday and Tuesday, if JNK sells off with it, or if we start to break that leading indicator, then maybe I'll stop talking about JNK quite so much. But for right now, JNK has been a good indicator of risk in the markets. And so far, it's still showing a little bit of upward price action, even though the NASDAQ is moving down. Moving over to TLT, not a good session for TLT. It finally broke down. So yesterday we were flat. We did see some of that negative momentum. And then it accelerated here today. Got all the way to oversold conditions here on the hourly chart before we bounced a little bit after hours. came right into that level that we talked about, which was the high of the previous push from about 101.80 all the way up to about 106.80. And since then, we've sold off back down into that level, broke through the 5 EMA on the hourly chart. Let's move over to the daily chart just to see what this looks like. So we hit that 144 EMA, and we're actually sitting right at the 9 EMA still. So this rally is still intact, similar to what we had here on 30 November, came into this zone and then rallied once again from there. This could be a buying opportunity. It's definitely worth watching. If we see another rally start to form, we could look up to that 115 level. Or if we come all the way down to the 21 EMA, somewhere around 21.80, I think that would be a solid buying opportunity. A nice little dip here. Maybe we double top, sell at those highs, or we push right through that and go up to about that 115 zone. Definitely worth watching TLT here now that this relentless rally seems to have slowed down a little bit, and maybe it'll be worth trading. Looking at the VIX on the hourly chart, went sideways throughout the day, even though the markets were rallying a little bit. And then into the end of the day, you can see we were selling off and we hit that 55 EMA, and then we had a big green bar, big upward hour. Moving over to the daily chart to see what that looked like, we are solidly above that 21 EMA, and it looks like we're pushing up to about 24 at this point. And if we get up to here and we break through that, then we have to look to about 26.50 as the next level of resistance. So I would expect a solid push up here, 24.35, 24.50, and then 26.50 for that next level. So I would expect that to push in about 2 sections, similar to what we had here. So we had a rally, a little bit of a cool off, another rally, cool off at resistance, then a push through resistance up to 26, 27 over the next week or two. Of course, we have CPI data, which could make that happen all in one day. You never know. Tuesday will be eventful, so keep your eye on that. But generally, that's what I expect going forward. Moving over to my results for the day, I did very well, $573. I usually aim for about $250 per day. That is my goal, and I doubled that here today, so what a great day. $76 here on my IRA. I did sell a call spread here on Monday. Here today for Monday expiration. I did the Monday expiration so I could hold it overnight. I do have 3 day trades right now, and I'm still below that $25,000 mark. So solid $76 here. And I have a little bit more profit to get here. I do expect the market to move down. I don't think we're going to close above 285, so I'll probably hold that to expiration. Unless we get a really hard push down, then I might close it on Monday. I do have the flexibility to do that since I took this position here on Friday. And then you can see here, I closed all the calls that I had going into the day. Those were all profitable. And then I actually sold another covered put here into the close because it was moving down so aggressively. I sold it at about 283.50, selling another 100 shares short. And I sold a 281 put at the same time for about $1, which means I'm going to be looking to buy those shares back at about 281. And then I rolled that put from today into tomorrow. I actually rolled it up a little bit, which clearly was a mistake. I'm already past my max profit here. I sold that for $1.34. I did take some profits on that put here today, so about $100 profit on that put that I had going into the day, which is good. Those are some profits that I probably would have had either way, but now here I am with this 284 put with a $1.34 credit, so my break even's down at 282.70 or so, which we're already well below that. And the market is selling off after hours, so it's actually down to 281.77 on the NASDAQ, so about 30 cents lower than we are now. Either way, I have about another $1 of profit potential here on this put and about $40 left on this call, so I might have to reposition some things, maybe roll these puts out in time. We'll see what it looks like on Monday. I really don't intend to have any positions going into the CPI data. CPI could really push the markets around a lot. And just for fun here, let's go ahead and open the options chain here for Tuesday. You can see the huge volatility range. This is the NASDAQ, the QQQ, sitting at 282 right here, you can see. And the expected move is all the way down to 274 potentially, or all the way up to 290. So this could go about $8 in either direction. And even at that point, you can still get a $1.23 credit, dollar credit all the way down here at 273. Giving you about a $10 buffer just to hold these positions, about $10 out of the money. So big wide range. We all know the CPI has pushed the markets around quite a bit. With such volatility going into CPI, I might not be against selling a couple calls all the way up here at 290, maybe 293, just to see what that looks like, depending on what the market does on Monday. But my going in position is that I'm not going to hold a position going into Tuesday, and then we'll see what the market does, and I can reestablish myself on Tuesday going into Wednesday. Let me know down in the comment section what you think the market is going to do on Monday. And is CPI going to come out hotter than expected now that PPI has been hotter than expected? Definitely like and subscribe if you got any value out of this video. Honestly, I've been pretty excited about how the market is going pretty much where I expected it to, so hopefully you're getting some value out of that. Definitely hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.